Hello and welcome to the channel. So in today's video we'll be going through how you could invest in the stock market as a beginner. So let's dive right straight into it. So the first thing you need to establish is, firstly, why are you investing? What are your goals exactly? Are you looking to invest for long term? Are you looking to trade? Are you looking to get some form of income, or are you investing mainly for long-term growth? So that's the first thing you need to establish. A lot of people want to invest but they don't really know why, and then when you question them they say, well, it's mainly to build wealth. Yeah, but what for exactly? When do you need the money by? If you're looking to invest for say 6 months, is it really worth investing in the stock market? Because it's one of those where short-term volatility, chances are you'll probably be at a loss. So it depends on what you want to do. Are you looking to trade? Do you know something that other people don't? Do you think you can make more money in the short term? Are you an expert in trading? If the answer to these questions are no, then the chances are you shouldn't be actually trading. I know there's a lot of people on YouTube and all over the place that promise you thousands of pounds within a couple of days of trading, but the reality is that if they were making that sort of money, they wouldn't be actually selling their courses. So that's something to bear in mind. If something's too good to be true, it probably is. So what I would advise is do your own research, look into a lot of these issues yourself, look into various platforms, look into what I will go through later on, and do your own research. I'm not a financial advisor, I'm merely just giving you tips and hints on what you could do to improve your investment journey, similar to what I've been doing myself. The next thing you need to check is, what's your risk appetite? How do you feel about losing your money by a certain percentage every month? For example, during COVID, the S&P was down by 20%. Now, how would you feel if your money was down by 20%? If you don't feel comfortable with that type of risk, you may want to consider adding bonds to your portfolio, which generally stabilizes the risk. It means that your portfolio may not grow as much, but also the fact that there won't be as many dips within your portfolio. So rather than it being 20%, it may already be down by 10, 15. So that's something to weigh up as well. If you know quite a lot about the stock market, or you know briefly, if you want to dabble in individual stocks itself, and go all in on equities as opposed to bonds, that's an option that you could go down as well. So that's a couple of options for you as well. So the second thing to check, as I mentioned, is your risk and how comfortable you are in what your risk appetite is. So if you were to invest in there, will you constantly check your portfolio, and if it's down by a few percentage, will you quickly sell it? If you are, then investing is not for you. But you also need to check your risk appetite as well, because it may mean that you may need to add more bonds in your portfolio so that it's a balanced approach and it's not as rocky as 100% equities. So that's something to bear in mind as well. So knowing your risk appetite, which would stop you from selling your investments, because overall investing is for the long term. If you're looking to cash out within a couple of years or even a couple of months, this is investing for the long term is not for you. I invest mainly for at least 5 to 10 years. But in terms of the index fund investing, that's mainly all for long term, for 10 years plus. But other investments I do mainly for around 5 to 10 years. So that's the second thing in terms of knowing what your risk appetite is. Now, the next thing you need to consider is, what do you actually want to invest in? Now, as a beginner, if only someone had told me and advised me from a young age of what to actually invest in, ideally, if you are looking to invest for the long term, the best thing to invest in is a multi-asset fund. That particular fund is globally diversified. It's an index tracker with minimal effort, and you generally just pay monthly top-ups. It's usually globally diversified, but I know certain people are mainly into their regional sort of funds. So for example, they'll go with an S&P 500, which is all good, but the reality is that you're narrowing yourself down to America. Now, if something happens to the US, they go to war or something, chances are your investments may not do well. Whereas if you're globally diversified, that particular one country or region would be a tiny cluster of your portfolio, so it would not have much of an impact if you were to actually invest in a globally diversified fund. So that's something to weigh up. There's various funds out there available. There's they range from 40 to 50% equities, 20-30% bonds. They have a varied assets within that particular fund. So for example, they'll have timber, gold, silver, whatever, commodities, all within that fund, hence why it's classed as a multi-asset fund, and it requires absolute minimal effort. Had I invested in this, I think I'd have quite a few quid now, because I was completely oblivious to this many years ago, and I only started dabbling in this about 2-3 years ago. So as a beginner, I would generally invest in a multi-asset fund. Now you're probably thinking, yeah, it's all good you giving all this information, but how on earth do I actually invest? Well, firstly you need to select a platform. There's various platforms out there. The ones that I generally use are Vanguard and Invest Engine, but they're mainly solely based on index funds, so you invest in 100% in equities. There's other platforms as well. You could go on Hargreaves Lansdown, Legal and General. I've not used those platforms myself, but when I did a bit of research previously, they did have quite a bit of high fees at that particular time, so that wasn't really attuned to my sort of goals of what I wanted to do. The whole purpose of me investing was to keep my fees low as possible and invest in something globally diversified, in 100% equities. Now it depends on what your goals are and how old you are as well, and what sort of risk appetite it is. It all goes back to what I've previously said, so it depends on what you want to do, but generally speaking, there's quite a lot of platforms out there. You've got your Vanguard, your Invest Engines, Free Trade, Trading 212, Legal and General, Hargreaves Lansdown. The list is endless, but it depends on what you want to do. So that's how you would start investing. Right, so you found your platform. What do you do now? Well, get started. A lot of people, they find the platform, they find the fund that they're actually interested in, but they just don't press the button, because they want to see how it unfolds. They're worried about the market going up and down like a yo-yo, but the reality is that's part of the actual process. It's part of being on the actual roller coaster, experiencing the ups and downs. So in order for you to go forward with this, what I would suggest is actually get started. A lot of the platforms you can generally just get started with £50 and then add your monthly top-ups. You don't need thousands of pounds to get started. I've actually done a video on this on Invest Engine, where I've started off with £100 and then top each portfolio up with £50. If you're unsure of how it all works, you could check a couple of my videos out on Invest Engine of how I started dabbling into ETFs as well, and I've also done a fully managed portfolio with Invest Engine to compare how they both go about, in terms of the performance over the long term. So check out my videos, let me know what you think, and if you have any other tips and hints as well, I'd love to hear from them in the comments below. Thank you for watching. Bye for now.